Hello traders, it's 8:02 a.m. Chicago time on Wednesday, the 9th of May, 2018. Thanks for joining me again as we dig into the market here like we do every day, every day. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking quite bullish. Risk on in equities. Crude oil leading the pack up $1.71, 2.5%. June crude, and I don't know why one of my cats here is just singing out loud, I guess. You might hear it. Crude oil June contract trading at 70.77, followed by the British pound. The British pound is up 0.43%. The leader in the indices is the Dow, up 87 points, 0.36%, followed by the S&P 500, up 7.75% or 0.29%. The laggards this morning, the DAX just dragging ass this morning, trading, having difficulty pushing higher, up 5.5 points or 0.04%, or down 5.5 points, down 0.04%. The laggard today is the yen, the bond, the notes, and the US dollar and the bund. So money's flowing out of safety into more risky assets. I don't know if it was in this in yesterday's Trader Bite or if I did it in an audio clip in audio update in the Convergent chat room, but I talked about the strong potential of a push to 2682.75 and then continuation up to 2700. The overnight highs 2684.50. Last week's highs 2681.75, which was missed by a tick on Monday. Monday's highs 81.50. And so what we have there is a double top on the weekly high, so we're looking for that to get blown up probably today. It looks like. So that's where we stand. As far as what's on deck, I don't like to go through the calendar anymore. There was PPI this morning, but we have. Crude oil inventories at 10:30. Pay attention to that. Wholesale inventories, which is a lower tier release. This is the final for March. Not as important. At 10. So we have 10 o'clock Eastern wholesale inventories, wholesale trade. And then 10:30 we have crude oil inventories. And we have a Fed speaker at 1:15. And there are Treasury auctions today, so pay attention to that if you're trading the yield curve or treasury products. Let's take a look at yesterday's action versus what we expected. Here's what we expected. Not expected, but what we had planned for is the better term. The plan was to open around 26.66 and a quarter. Drop through to 2657.75 area. Balance, looking for an impulse up, and we're looking to finish at 2677 at some point in the session yesterday. Of course, we did have the announcement by the U.S. government with regards to Iran. I'm sure all of you heard that. It came out at 2 o'clock, a little bit after 2, in a press conference. The U.S. is removing itself from that agreement. Other countries are reaffirming their commitment, and the IAEA, the international agency that monitors nuclear actions around the globe, is saying that Iran is complying. So it's going to be interesting to see how that unfolds, but sanctions are going to be imposed. Companies that are doing business with Iran now have 90 days to, I believe it's 90 days to get out of there, to end their business and so on. Europe, multiple countries in Europe have said that they're going to continue to do business with Iran. So that creates a weird kind of economic issue and political issue. So that's something the reason I'm getting into that detail is just to say that the situation is kind of complicated, and that's something that's probably going to linger for a bit. So that's the primary scenario. The secondary scenario is that we try up early, get stuck at the low volume node, which was at the overnight high 2672, and then we start to move lower with the key target being the 2649, the key initial target being 2649, and any continuation on the selling is 2640. That did not happen. We basically saw both plans play out yesterday. We had the move down and then up. We never got to the point of control from the prior day, 2677. We got to 2674, 75 and a quarter. And so we tested lower on the open, test lower, push up, and then the expectation was consolidate in this this area and then finish somewhere up here. We did not get that. And the secondary scenario was to open, test up into the low volume node around 2672, 73, and then rotate over and get to 2649. We got very close, but we didn't quite play that way. So we saw kind of a combination of both. The overnight session coming in, now yesterday, let's talk a little bit about that. Yesterday, another neutral day. I was fairly confident statistically that we are likely to have had our bottom put in at 2659.50 early on, and that we are likely to continue to extend higher. So I was playing scenario 1 pretty much the entire morning until it started to flop over and fall out of the prior day's low, which was 2662.50 right here. Right, so once we pushed down and extended the range up, there was about a 22%, 22.8% probability, historical keyword, probability of this level being broken. Right, pretty good bet. So we have the range extension up. The low is likely in 59.50, and then as it just flops over and gets to the prior day's low, which is this green line, that takes that off the table. We start to look at, okay, it's another neutral day, and so there it is. It's another neutral day. We ended up taking the IB low. We took the IB high. We took the IB high again, we took the IB low again, and we took the IB high again on the close. Completely balanced day. I did mention yesterday to the members that this is consolidating and we're not going anywhere. We have a pretty good taper on the high. We have a pretty good taper on the low. As prices moved down, there was less and less participation. We'd like to see that. And we have a pretty good balance zone in the middle. So what we're likely to look for is imbalance coming into the next session, likely. And that's what we've got. We've got imbalance in the form of a gap up. And we are stuck in this right now. Remember, I drew that profile yesterday and talked about how the top of it is pretty blunt, and now we are basically stuck at the point of control of that of Monday's trading right here, 2677, yesterday's target for scenario 1, and we've shifted the point of control down 2663 and a quarter. We're above there, so this to me seems very, very much primed to continue higher into today's session, and that's my expectation, my by far greater expectation. So the overnight session, pretty good volume coming in, and we didn't do much in the Asian session, but in the European session we were just very bullish, and we pushed into 2684.50. We've just lingered up there pretty much the entire session. We have a very clear double distribution profile with the mid falling at the low volume node. So this morning I'm going to be watching 2674, the 2674 area carefully right in here. And I want to see, does it get supported or does the fact that inventory is long, the inventory is long, is that likely to have us square up and push lower into 2670.50? And so we'll see. We'll see how that plays out. So this is where we stand currently. As long as in the next 15 minutes we don't push through the 75, 50, 74 area, that's going to be the initial line in the sand for me. Anything that bounces off of here and gives a good impulsive move, hopefully with some delta to go with it, is going to be a long. So look for a long on a pullback, look to scale, look for the overnight high to be taken out. That's a high probability, 98% or so, and start aiming for 2690 and the stock zones above. So let's look at the plan. That's pretty much the primary scenario. Let's look at the plan here. This looks a little messy. I know it does because it's got my stock zones on it. Let's kill these. So this morning, the expectation, open auction out of range. We are dead center in Monday's most accepted price here, the point of control, 2677. And the expectation is we would drift lower, and it could drift as low as potentially 2670.50 this morning, but 2674, this overnight low volume node, holds. It happens to also be a stock zone. I'm looking to buy here, this area right here, or look for an impulse and a pullback towards the area. So look to buy a little bit later. There's some price risk there. And then look for it to push through this 82.75, consolidate, breakthrough, and then start looking for 2690 quarter, and then ultimately 2693.75. That scenario one is bullish with a potential open gap, but not likely. So the thing to watch out for with this scenario is what is the quality of the responders? What is the quality of the sellers coming in, responding back to the fact that we are higher than yesterday's auction? Are they able to, for their effort, for the amount of selling, bang, bang, bang on the bid, for their effort, are they getting anything back? Are they gaining price for their effort? Think of like those old days, like the movie The Patriot or whatever, when they stand in line and they put powder in their rifles, compact it, and they just stand in line and shoot at each other, and then the next group of people moves up, shoot, and then the next people, like, are they, for all that shooting, are they getting any territory or not? If they're not, then they're likely to become buyers eventually. If they're hammering on the bid and they're not able to get any price territory, they're likely to be buyers. So we're looking for that impulse up, and then off to the races we go. Secondary scenario, we open with really aggressive buyers on the get-go. We push through, open, test, consolidate, and then we get the real impulse, and then it's the same scenario where we end up somewhere in the 90 quarter, 93.75 area. That's 2. The 2 is more of a just a test higher immediately, and it looks like it's not able to go. 3 is one where we push higher and then we get into the prior day's range, consolidate here at 74, and then we break through the overnight LVN and start moving into the lower distribution. And now it's all about getting down into yesterday's point of control, 2662.50, which is also the area of the MC point of control right here, 2663.25, this number right here. So that's scenario 3. That's the seller scenario. Not very likely, but if it does, we're all good. Yesterday's volume was not so fantastic. It was not so fantastic starting out, but after the Iran announcement, it picked up. We ended up with volume that is around the most common, 1.1 million contracts in the RTH session. And so yesterday's trading was quite meaningful. There was some pretty good exploration on both sides. And the market accomplished its purpose of finding balance yesterday. Now we're at imbalance, okay? I did talk about some important things yesterday in the last 10 minutes of the Trader Bite. I suggest you take a closer look at that. Just a quick listen to remind you that you are trading randomness in a sense, and to just be very, very comfortable with that. Good luck today. I hope you gain something every day you're tuning in. Take care.